All right. Hello. Good evening, ladies and gentlemen, and welcome back. All right. And joining me for this Facebook Live session of $2,000 portfolio cash flow. All right. With I'm Possible TT. All right. Now, so you can hear me and you can recognize my voice and it's going on live right now. Can I get you to drop a comment? All right. And let me know that you're joining me in this session today. All right. Again, I'm very, very glad to have all of you here. All right. Now, as usual, all right, possibly, all right, maybe because we took a break, all right, last week, all right. I apologize because I was unwell last week, all right. So I didn't send out the notification to inform all of you that I won't be going on live, all right. Okay, I do apologize for that, all right. But we have a Facebook user, all right. Now, so Facebook user over here, all right. Can I get you to see the banner? All right. So if you're joining me for the first time, or if the platform is recognizing you as a Facebook user, all right, can I get you to go to this website, streamyard.com/Facebook? All right, okay, and you see a Facebook banner over there. Click on it and approve your profile. All right, so that when you leave a message again for me, all right, I will be able to see who's leaving the message. Okay, all right. Now, so we do have quite a couple of Facebook users over here. All right, so if you do recognize that this is your comment over here, all right, can I get you, all right, please to go over to the banner right now, all right, okay, the website, all right, and click through, all right. Now, and for the rest, hi Mei-Ling, hi Susan, hi Ivy, all right, hi Nelson, all right, good to have you back, and Hoy and KT as well. All right, now, so without further ado, all right, I just want to get my session started. So once more, let me repeat myself. All right, streamyard.com/Facebook. All right, click on the banner and approve your Facebook profile for the software. Yeah. All right, now, so I'm going to remove that. All right, and the next thing I'm going to do is please read the banner scrolling at the bottom of the screen. All right, this is a sharing session, all right, where I'll be showing you how I plan my portfolio, how I go about achieving a $2,000 portfolio cash flow, all right, for this particular portfolio that I'm building right in front of all of you, all right, and I've been doing it live as often as I can every single Friday. Yeah, okay, for the viewers who are joining me live every single week, all right, to prove to you, all right, a simple point, all right, that a $2,000 cash flow, all right, or roughly about a 2% return, right, on a month-to-month basis is actually achievable. All right, now many of you may not see that 2%, all right, is actually substantial enough, all right, but if you can do it every single month throughout the year, all right, you are actually raking in, all right, 24% per annum, all right, okay, and if you can keep doing it for multiple years in a row, yeah, okay, regardless of the market conditions, all right, or how interest rates are affecting the markets, and putting a lot of pressure on many people right now. Yeah, okay, and we're doing this in a very, very passive manner as well. All right, once every Friday, that's about it. All right, and we do skip some couple of weeks as well. All right, okay, 24% compounded, all right, can actually grow your money very, very quickly. Yeah. All right, now if you do follow the rule of 72, all right, let me just get my numbers right. Let me do a fact check over here. Yes. All right. Okay. If you do achieve a 24% return, all right, the rule of 72 basically tells you, all right, in 3 years, right, you're effectively doubling your money. Now, okay, if you keep doing that, all right, okay, you can double your capital, all right, every 3 years, all right, it's actually going to compound in a very, very quick pace. Right now, why do I say that? All right, now, assuming if you're starting with $10,000 portfolio today, yeah, okay, $10,000 portfolio will become 20,000 in 3 years from now. Right, but in 6 years from now, all right, it's going to be $40,000. Yeah, okay, all right, okay, and yeah, okay, in 9 years from today, yeah, okay, you're going to actually have $80,000. Yeah, okay, now, so you started with $10,000, right? Okay, so within the next 10 years, all right, you're actually going to grow your initial capital by up to 8 times. Yeah, okay, if you don't consider that fast enough, all right, I don't really know what else you can do. Yeah, okay, and we're doing it in a very, very risk-averse manner. Yeah, okay, and that's how we plan to build our portfolio. Yeah, okay, now, so today I do have a big news as well, all right, because we are just going into year 2 right now. All right, I'm still going to continue building this portfolio right in front of all of you. All right, okay, but, okay, also for the public in general, right, who are joining me week after week after week, all right, some of you have been left, right, okay, with that thinking, all right, Terence, all right, if I do become one of your community members, all right, okay, how can I actually do better? Yeah, okay, so I'm going to set up, I basically said I've set up another portfolio altogether, all right, which I'll be tracking with all of you. All right, now, of course, I won't be mentioning the trades because you need to be in our inner circle, all right, okay, to know our strategies and how we build this portfolio, all right, okay, but we are essentially trading almost similar stocks, all right, okay, and similar approaches. Yeah, okay, but I want you to see side by side, all right, how the difference in terms of portfolio returns are going to look like at the end of every year. all right, okay, with, all right, the two different approaches that we build over here. Yeah, okay, one, all right, okay, with the general public over here, all right, with live capital, all right, okay, and one, all right, if you do become one of our community members, yeah, okay, also with a live capital. Yeah, okay, all right, so this is what we'll be tracking over the next 1 year. All right, so it's about taking accountability, all right, okay, because that's what many of you want to see over here, all right, that we as mentors over here are able and capable to do it, all right, with real life capital. Yeah, okay, but please be aware, all right, okay, that all forms of trading and investing, all right, bears a risk of loss. All right, so all I'm doing over here, all right, is a form of sharing. Yeah, okay, please take it from an educational purpose. All right, by no means is any form of recommendations or suggestions for you to take or follow any of these trades. Yeah, okay, please do your own due diligence, right? Be aware of all the risk involved before deciding to take any actions, right, inside your own portfolio. Yeah. All right, now, so I still have a Facebook user who's joining me right now. Yeah, okay, thank you very much for joining me. Okay, but please remember, all right, I need you to approve your profile so I know who you are leaving these comments. Yeah, okay, and do remember to hit the like and share, all right, as I go about during my session. Okay, now, so for those who are joining me new, all right, what you see on the screen right now is our current running portfolio. Okay, and what you see right now, all right, is actually month 13. Yeah, okay, for the first 12 months, all right, okay, I have achieved a total, right, of $27,000. All right, we started with a capital of $100,000, right, back in May 2022. All right, and our aim is to achieve a $2,000 cash flow on a month-to-month basis. All right, so not only did we do that, yeah, okay, we actually surpassed it. Right, okay, because in our first year we raked in $27,000, so we actually hit 27% returns, right, from May, right, to April 2023. All right, and what has the market done? Right, the market hasn't actually performed too kindly, right, but we still raked in 27% no matter what. Yeah, okay, now, so what did I do? All right, I built this entire return using a strategy that I developed, that I tweak, all right, and I call it a portfolio put. Yeah, okay, all right, now, so what's a portfolio put? All right, just stay tuned. All right, because I'm going to be addressing it week to week over here, all right, on how I allocate my capital, right, into the portfolio puts that I'm selling, all right, and taking for my portfolio on a week to week basis. Okay. Now, so I did remember that one of you have actually left a comment. All right, I did see it. All right, but I didn't answer it because I want to address it live. All right, and you are right. Yeah. Okay. I can't remember who it was. Okay, but you're right. Okay. So what I did over here was I adjusted the cash flow. All right. Okay. I believe that you're addressing towards the fact that we closed, all right, our EMR trade, all right, for a slight premium. All right. Okay. So I did adjust over here, all right, and it brought the cash flow for the month of March, all right, down a little bit. Yeah. Okay. A couple of dollars. All right. So we're still about $1,900 for the month. Yeah. Okay. And the second month, which I recognize the cash flow, all right, okay, also brought us this amount. So you can see it's $142.50 for each of these months. Yeah, okay, and this one still brought us 2,105. Yeah, okay, so it's about clarity, it's about transparency. All right, so I agree with you. All right, I apologize for making that slight oversight over here, but it's all addressed. Okay, yeah, all right, okay. Now, so let's continue building our May 2023 portfolio. Okay, but of course, before doing that, all right, let's look at the state of the markets. Yeah, okay, we haven't got through since 2 weeks ago, all right? So I want to make sure that I catch all of you up with the current market status and current market condition, okay? All right, ladies and gentlemen, so what you see on my screen right now is the SPY chart. All right, now, so for those of you who are new to the stock market, what is SPY? As you can read on the screen over here, all right, it says it's the S&P 500 ETF share. All right, now, so trading this is just a stock version of the entire S&P 500. All right, now, so looking at this stock is as good, all right, as us looking at the S&P 500 itself. All right, so what did the market do? Can all of you see what it just did? All right, now I said, right, for the entire last 1 month, right, as you can see over here, the stock market was trading between, right, the 4,100 to the 4,200 range. Yeah, okay, that's what it's been doing. All right, so, over the last couple of days, the sell-off has brought the market back to the 4,100 level. Yeah, okay, and what did it do today? It did a strong bounce. All right, so basically the market is telling you, I'm not ready. I'm not ready to surrender, right, to this bearish move right now. Okay, but at the same time, right, I want to bring you an awareness, right, to something that's brewing in this market. All right. Okay. Now, I don't want you to think, right, that I'm all about bad news. No, I'm all about facts. All right, and what's going on. Okay. Now, so in case you haven't realized, all right, the Fed has just raised the interest rate once again. All right, and the interest rate right now is actually standing at 5.25%. All right, now, can all of you please tell me this by leaving a comment? All right, okay, if living in Singapore right now, all right, if our current central bank, all right, is pricing interest at 5.25%, all right, and the banks borrow from the government, all right, and then give us loans after that, all right, that means that any loans that we take from the bank right now, all right, will be paid at higher than 5.25%. So let's add about 1% on top of that. All right. So you're looking at about 6.5%. All right. So I just want to gather your response right now. If any of you are thinking of buying properties, right, but your property loans right now are charged at 6.5% interest, right, will you continue buying that property, or will you hold off buying those properties right now? All right. Can you leave a comment and let me know? All right. I want to know what your actions are. Or if you're thinking about buying a new vehicle, all right, but the vehicle loans right now are charging you about 7% interest, right? Would you go ahead and buy that new car, all right, or would you hold back the purchase? All right, okay, you can just leave a comment, buy or hold back, all right? I will understand that. All right, so Facebook user over says hold off. All right, so can I get you to go to StreamYard.com, all right, and approve your profile? All right, StreamYard.com/Facebook. Ladies and gentlemen, can you please see what is going on, right, inside those comments? All right, okay, 90% of these people are saying hold back. Yeah, okay, if you say buy, all right, probably you're buying with cash. Right? So I've got nothing to say. You have too much money, right? Okay, but majority of the working class people, majority of the community, right? Okay, most of us, all right, actually make purchases based on loans. Right, and in fact, right, even if you're investing in properties, if it's going to be an investment property, it always makes sense for you to buy with a loan as well. Agree? Now, but 90% of you just said that you're going to hold back. So if you're going to hold back, then why is this stock market going up right now? Has that hit your realization? Right? Has that actually hit home, right, to the threat, right, that you're seeing right now, right, within this market, right? Because many of us, right, are usually blinded by greed. Okay, all right, now let me show you what I mean when I say blinded by greed. All right, now look at Meta. All right, just look at Meta. Okay, all right, now so just not too long ago, all right, okay, about 1st of February, all right, Meta stocks was trading at about 151. All right, about 151. All right, can you please tell me where is the stock right now? It's 250. All right, 250. This stock has gone up by about 80%. All right, so the stock has gone up by 80%. All right, but I want to ask all of you a question. All right, has Facebook done well? It has. Okay, but looking at what's going on right now, okay, I want you to continue by answering me this question. Okay, all right, now so we do a like for like comparison over here. Now, comparing, all right, about 4 quarters ago, yeah, okay, to where we are right now, has the company grown their earnings, all right, by 80%? Has the company grown their earnings by 80%? All right, can you just leave a comment in the chat box? So the answer is no. Right, but of course, some of you are going to argue that, Terence, you cannot look at it this way because Facebook is Facebook, Meta is Meta. But I want to ask you this question: is how many of you consider, right, Meta as still, right, a growth stock, or would you consider Meta, right, of more like, right, a blue chip stock right now, okay, or a big cap stock? All right, now can you type in the chat box and let me know? Would you consider Meta, all right, as a just big blue chip stock right now, or you still consider it as a growth stock? How will you categorize this company? Thank you very much, Ivy. All right, so Ivy is the first one to come in. They mentioned that, hey, Terence, this is a big cap. And I agree. Why? Because is Meta really growing anymore? No. All right, it's pretty much grown to as big as it can. All right, and if you consider it this way, okay, if you consider it this way, all right, then I want to give you another comparison. If any of you ever saw a blue chip stock, all right, has its stock price shoot up by 80% in just 3 months, right? What will you do with the stock? Will you continue holding it and expecting to make more, all right? Or will you actually start thinking about cashing out on your profits right now? What will you do? All right, what will you actually do? You see where I'm going, ladies and gentlemen? Yeah, okay. Many of you, when you put perspective into situations, when you put perspective into your investments, right, you will actually be able to make better decisions from here. Yeah, all right. Okay. I hope you see where I'm going over here. Yeah, okay. All right. Now, so Facebook user, I don't know who you are, all right, but if you regret, all right, if you regret at 192 when you sold it off despite making a profit, all right, okay, I'm going to tell you this, right, in about a few months from now, all right, okay, you're going to look back, all right, and thank yourself, all right, okay, trust me on this, all right, why? Because if this stock can go from $380 down to 100, down to what, 88, right, within the span of a few months, do you think that the stock won't go and do the same thing again? Right? Do you think it won't happen again? Yeah, okay, Andy. All right, do you really think it won't happen again? I can tell you it can happen in the blink of an eye. All right, and can all of you see a trend right now? All right, can all of you see where it is? Can you see where Facebook stock is right now? Right, it has clawed its way all the way back to the 200-day moving average, and it is resting on that line right now. You go think, right? If you don't want to cash out on your profits, yeah, okay, because I just met some people or some of my students and they say, Terence, I'm thinking about holding Facebook or Meta for bigger profits. Think again. All right, think again. You when you're investing, you gotta first understand, all right, what kind of stocks are you holding? What's the potential of the upside compared, right, to the downside risk? Right. And when this doesn't tally, yeah, okay, you gotta take the right actions and the right approach. Yeah, okay, Tanya, yes, right. The green line over here, right? It's actually the simple day 200 moving average. All right, can you actually see where the trend is right now? Yeah, okay, now. So the question is, all right, at this current valuation, what, 240? $164, 176, 220. Right. So let's say the company makes $4 over here and $4 over here. So the company makes $8. Okay, the company makes $8, and the stock price right now is $230. Okay, now, so if we do a simple PE ratio calculation, right, we have Meta right now, right, trading at 29 times PE. 29 times PE. So my question, in the midst of a recession, in the midst of inflation going on right now, right, in the midst, right, of companies scaling down, cutting down on their expenses, right, including advertising revenues and advertising expenses, right, do you think Facebook can grow their earnings by 28% year on year? Do you think that's a possibility? You got that right. Hoy, you got it right. That's a 200-week moving average. Can you see the bigger trend right now? All right. Can you see why it's worse? Yeah. All right. Okay. Because charts, all right. Okay. When you look at charts, all right, the shorter term always gives way to the longer term. All right. So that's definitely a bigger trend that you're seeing right now. Okay. Now, so back to the question that I just addressed over here, right? If it is spotting about 28, 29 times PE ratio, right? The market is pricing it as though the company is expected to grow their revenues, right, by 29%. Can Facebook do that? Right? Think very hard. So if it can't, all right, okay, then where's the stock gonna go next? You make your own judgment, right? And the next problem, right? Next problem. Please answer me this next thread over here, okay? All right. In the midst of rising interest rates, right, technology stocks perform well or they perform badly. Can you leave a comment and let me know? All right, I'm throwing you golden nuggets, right, in terms of saving you, right, from potential pain, right, that's about to happen, right, over the next 1 or 2 months in this market. All right, okay, so please participate and come in with the answers. Bad. All right, but how has the technology stocks performed up until now? Very well. All right, okay, how do I know it's very well? You just need to look at the NASDAQ. Look at that. All right. Okay. Now, so if I bring you back to the dailies, look at that. The Nasdaq has been scaling up, right, like crazy. So what is the market doing again? Financials are not doing well. Oil is not doing well. So how do they keep the index up? How do they keep the markets up? By buying the big tech. That's it. Why? Because just buying into 5 stocks, right, is worth 20% of the S&P. Right. So while financials are going down, while oil stocks are going down, if they keep loading capital into big tech like Apple, like Meta, like Google, like Amazon, all right, the stock market is going to stay up. All right. So you see how the market is fooling you right now. You see how the market is playing all of us right now, especially those in the unknown. Yeah. Okay. So do you still want to be, as reckless as you want to be in this market? Because the Fed is not going to stop raising interest rates. They can't. All right, the target for inflation is 2%. All right, the market is still throwing out 5% and higher right now. All right, okay, companies are slashing jobs. They haven't done enough. They're still going to announce more job cuts. All right, so these people are spending less. Loans are getting more expensive. People are going to buy less. So sooner or later, right, the economy is going to start slowing down. Okay, now I know some of you are going to say, hey, Terence, right, but a lot of companies are announcing much better than expected earnings. All right, so let me bring to your attention over here. Right, like for example, let's look at some of the more recent ones, right? All right, like P&G, all right, do you notice, all right, the estimate was 131, but the company reported 137. So the stock gapped up. Why? Because earnings was better than expected. Now, Terence, why is this still happening? Simple, all right, okay? These companies are still producing their products at the same cost or roughly the same cost. Yeah, okay, they do this by adjusting the quantity, by adjusting the size, all right, okay, but they're marking up the prices. That means these companies right now are pushing on the cost, all right, okay, to the consumers, all right, okay, and by pushing up the prices, they're actually making bigger profits, right, on each of the product that they're selling, right? But let me ask you this: how long can they keep doing this, right, before us as consumers start to feel the pinch? All right, and when we start to feel the pinch, what are we going to do? We're going to find substitutes. All right, and when we start finding substitutes, right, these companies will start coming after our sales dollar again. How are they going to come after our sales dollar? By bringing prices down. All right, so right now, it's all about supply demand. As long as people keep being willing to spend money, right, these companies are going to keep raising their prices. Right, but when they realize they can't do that anymore, right, then prices have to fall. Just like what's happening to Starbucks right now. How many of you have noticed actually Starbucks drinks, right, prices have actually raised, right? That means their prices have actually gotten more expensive. Anybody? All right, so I have a Facebook user over here who left a comment. Correction might happen. Yeah, okay, now, so that's the key. A correction might happen, but how severe it's going to be is the frightening part. Right, many people are still underpricing, right, this trend. Right, so I want to use this situation or this session to bring it to your attention. All right, so when you go about making your next trade, be very careful about the exposure that you're putting out. Right, or if you have any stocks right now that you're very profitable on, think about cashing out on half of them. Right, think about cashing out on some of them. Right, at least realize some profits, at least take the risk off the table. Right, so that's the prudent thing to be doing right now. Okay, now, so with all that said over here, let's get into our portfolio and let's see what I have planned, right, moving ahead. Yeah, now, so some things haven't changed. Okay, now, and I say haven't changed because, right, we are still pretty much stuck on some of our stocks. All right, so for example, we have WBA that is trading at $32 right now, right, and we own the stock at a price of 45. So I'm sitting on what I call paper losses right now. Now, am I worried? No. All right, why? Because this stock is still generating cash flow. All right, and the stock has been sold down as badly as it can be. Yeah, okay, which means that nobody wants to sell anymore. Yeah, okay, the sellers are not there, but the company is still making good profits. Yeah, okay, there's consistency. Can you see? All right, so the company is not like, they're about to go bankrupt. All right, but the stock market thinks like they are. All right, so what does that give us? It gives us an advantage. It gives us a bargain, a situation. Yeah, okay, so I can't be getting out on a stock right now. There's nothing fundamentally flawed about this stock. Right? Yeah, prices are not that good. Yeah, okay, but I'm gonna hang on. Okay, I'm gonna hang on. All right, now, so the same applies with Verizon over here. All right, so we have Verizon at 37. So I'm just going to hang on to my current stocks. Okay, the next one I have is TSN. All right, okay, so my TSN stock right now is sitting at $60. All right, I have it at 77. All right, so let's go have a look at TSN right now. All right, and we have earnings right around the corner. All right, it's on the 8th. So that would put it at 6, 7, 8 on next Monday. All right, okay, next Monday, all right, before the market opens. All right, okay, so, following the footsteps of many of these food-related companies, if the earnings are good, all right, we might see the stock jumped up, all right, and that will give us a chance to add on some cash flow by selling calls next week. All right, so we'll take a look next week of it. Definitely no actions today. Yeah. All right. Now, so our next one over here is HBI. All right. Okay. We're still on paper losses. All right. The stock has sold off over the market correction over the last couple of days. All right. Okay. So we have already liquidated, all right, or swap around half the position. We still got half more left to go. All right. Okay. So we'll keep a lookout for that. All right. Now, the next one over here is Pfizer. All right. So we're still holding on to Pfizer shares at 47.50. Yeah. Okay. So it is worth 38 today. All right, so I'm still holding it on. All right, I'm still staying in this position. All right, okay, now our next one over here is Hog. All right, so Hog is a portfolio put. All right, now, so some of you are new with us. You might be asking this question. All right, Andy, all right, the link is streamyard.com/Facebook. Yeah, okay, that's the link that you should go to, all right, to get your profile approved. Yeah. So as I'm mentioning over here, Hog is our first portfolio put position for this month. All right, okay, now the difference is portfolio put is as good as a naked put. All right, okay, but most of the time, naked puts, right, can be traded in two manners, with leverage or without leverage. Now, if you trade it without leverage, it just means, right, that if you are given the stock, all right, okay, you have actually all the cash ready to buy the stock. So this is actually called a cash secured put instead. Now, a cash secured put simply means, right, if you have to buy the stock, the money is there, right? You have given the money, you have kept it in your account, right, so you can afford to buy it. Yeah, okay? All right, now, the leverage way simply means if you trade it as an option strategy, all the broker wants from you is a 20% margin. All right, okay, 20% of the cost of the shares, all right, which is $36 over here. Right, so if you have 20% of that amount inside your account, the broker will actually let you make the trade. But understand this, if you trade with margin, if losses start to accumulate, the brokers will start to require more and more of these cash. All right, so many of these option sellers, when they do naked puts, right, they load their portfolio without being aware of the risk. So when they get an assignment, they simply cannot afford it. All right, so when they're forced to liquidate the stock because they don't have the capital to hold it, all right, that's when losses are realized. All right, and that's when most people end up failing, right, when they execute this strategy. Right, think of it this way. It's just like an insurance company, right? Insurance business is supposed to be stable, right, and cash flowing, right? Good money as well, good profits. But if you don't watch, right, your risk, right, and if customers come and claim, right, and you tell them I can't pay, that's the end of you, right? That's the end of your business. Can you see that? So never allow yourself to be in such a situation, right? So what do I do when I do it in a portfolio put manner? Simple, all right? When I take a portfolio put trade, I allocate 70% of the required amount. So not a full 100%. I allocate 70% of it, right? But whenever it becomes a stock, like Pfizer over here, when I do get assigned that option, yeah, okay, these stock positions are then held with 100% cash flow. All right, if you can see the calculations over here, all right, it's the total of the stock position times the cost of the share. All right, so it's a full 100% allocation. Right, but for portfolio put, right, you can see a 0.7 over here, which represents 70%. Yeah, okay, so that's how I use it. So I take on a slight leverage, right, okay, but it will not damage my account. Why? Because I'm holding on to great profitable businesses, right, which are already undervalued before I take a trade. Right, so there's not much further lower that it can go. All right, okay, so I can make sure, right, that this way, all right, I've always have enough cash flow. Yeah. Okay, so that's the approach that I take over here. Slight leverage, all right, but well within my means and well within my control. Yeah. All right, now, so I have a Facebook user over here. All right, How is the semiconductor sector? Why would you want to sell some puts? Didn't I just say that the whole sector is overbought? The whole sector is so expensive. And then you want to go out and sell some puts now? Don't do that. All right. Are you courting trouble? Are you asking for trouble? All right. All right. So I have another Facebook user over here. All right. Does the broker charge margin on used interest? All right. Okay. To be honest, all right, I don't really pay attention to this one. All right. Okay. You can go check your books, but I'm pretty sure, right, when you do it as a naked put option trade, that means when you do it as an option trade, all right, okay, the margin is not charged on that. Okay, until right a loan is actually taken. All right, okay, remember, all right, they can only charge you interest when there's a loan given. All right, margins are what they require from you. So technically, no loans are taken. All right, okay, so you won't be charged, right, until you're loaning money from them. Yeah. Okay. Now, so our hog position is a $36 put option, which expires in about 2 weeks from now. All right, and the stock, all right, is trading at $34. All right, so it's sold off over the last couple of days, all right, along with the market. So am I fearing? No. All right, why am I not fearing? Can you see the positive divergence that's building up while the stock is going much lower? All right, okay, the strength behind this is just not there. So that means, all right, the sellers are not participating. All right, these are just people who are panicking along with the market. All right, okay, and that means, all right, the buyers can quickly come in and push the stock back higher. Yeah, okay, and if you look at the earnings, right, it's much better than expected. Right, they estimated $1.40. The company made $2. Can you imagine that? That's a beat. That's a severe beat. Right, a very positive sign. Right, and they still sold this company down. Does it make sense? It doesn't. But when something doesn't make sense, that means there's an opportunity. All right, okay, so why would I want to get out of this trade right now? I've got 2 more weeks to fight. All right, so I'm going to keep the fight on. Yeah. Okay, our next one over here is Macy's. All right, so Macy's was pretty much the swap, all right, for half the position on HBI. All right, okay, so we have a $20 puts. All right, so Macy also sold off along with the markets. All right, as you can see over here, it went from like 16 all the way down to 14 right now. All right, so I'm not fearing. All right, I'm not fearing because in panic, all right, okay, market sells off all retails. All right, and they sold this retail stock to a RSI of 20. That's severe enough. Right, everybody wants out. So when everybody's out, then nobody's left. All right, so if the company is making good profits, why would I want to get out? So I'm staying. Yeah, okay, for this trade right now, I'm staying in this stock. All right, we will unfold 2 weeks from now. All right, so Intel, all right, we have to tackle this one today. All right, okay, we have to tackle this one today. All right, now do give me a minute. I just realized I haven't logged in, all right, to the trading portfolio. Okay, while it's logging in over here, let's continue. All right, now, so I have a covered call which expires today, all right, for Intel at $29.50. All right, and we have to tackle it today. Why? Because our Intel stocks are trading at, where's my Intel stock? It's gone. I'll just load it again. Oh, it's way up there. Okay, my Intel stock is trading slightly above. It's 30.87. Yeah, okay, so we're going to do what we've been doing over the last couple of weeks, yeah? All right, so we're going to repeat the process once again. All right, so having a look at Intel, first, all right, I've got to buy back the $29.50 call option. All right, so I've got to buy it back. So if I buy back that option today, all right, it's going to cost me about $130. Let's just take $140. All right, okay, that's the current ask. All right, so it's about $138 to $140. Yeah, okay, all right, now, so let's go ahead and do that. All right, so May 5th, all right, 29.50. All right, so I've got 5 of these options. All right, so I'm going to buy them back. Let's try 138. Let's see if it can get done. All right, it's taken. Yeah, okay, now, so I just bought back. All right, okay, I bought back 5 of my 29.50 call at 133. Oh, man, I wasn't checking. All right, 133. All right, so that's done. Oh, market came off. All right, that's why. All right, so it got me in at 133. So I've closed that. All right, so I'm going to move this call right now to 2 weeks down the road, all right, which is 19 of May. All right, so I can move it to 30. Can you see? All right, okay, so I can sell the 30 right now for about 130. All right, so I'm going to do that. All right, it's done. All right, now, so what I've done over here is I've sold the 19 of May. All right, okay, $30 call for 130. All right, so this switch actually cost me 3 cents. All right, I paid 133. All right, okay, but I only collected back 130. All right, but in the difference over here, I actually move. All right, okay, the stock assignment price up by 50 cents. It's a good bargain. Agree? It's a good bargain. All right, okay, why? Okay, because if I don't take any actions today, all right, my 500 shares, okay, will be taken away from me at 29.50. All right, which I don't want because I'm going to lose quite a substantial amount. I don't want that. Okay, plus, remember what I said earlier, right? When the entire tech sector starts to sell off, right? Intel is a major player in the tech sector, right? It won't avoid the sell-off. Yeah, okay, you've seen Intel bounced around for a couple of times right now. Can you see that? Right, it actually came all the way down to 28.75, but we weren't having any live session, so I didn't close the trade. All right, and it bounced back above. All right, so just too bad. Earnings caused it to bounce back above. All right, it came back down to 29.78. Yeah, okay, all right, and then we are caught in that kind of that period over there. All right, but all's good. All right, I still expect it to come back off. All right, so I'm willing to sacrifice a little bit of the cash flow, all right, for this. Yeah, so let me cut this. Let me move it up. All right, it should be somewhere here instead. All right, so I close this. Oh, no, sorry. I paid minus 0.03. There we go. So I lost $15 in cash flow, right, when I closed this call option position today. All right, and my next one, which I did today, is 5th of May, right, for 30 strike. Okay, all right, it's going to bring me 0 cash flow. All right, yes, I collected 130, but I'm going to recognize 0 cash flow because I offsetted the loss over here on the previous transaction. Yeah, okay, now, so I lost $15 on this switch over, all right, and the next one expires on 19th of May, right? So I get to keep my shares. All right, so no issues over there. All right, so this trade continues basically. All right, now, so Tanya, all right, so in the case where the stock has been called away at 29.50, all right, now, this is what you can do. You can just buy the stock back, all right, okay, buy the stock back because stocks are now commission free, right? And then you attach the new $30 call to it, all right, okay, you attach the new $30 call to it, yeah, okay, all right, so you're effectively putting back the position. Yeah, okay, all right, now, so that's something you can do. Yeah, okay, EL, all right, so I bought Intel at 42.50. All right, why am I selling a covered call at 29.50? I didn't. All right, okay, I started selling the covered calls, right, for about a month back, right, because we believed that it wasn't going to break this 200-day moving average, right, but it has broken since then, right, and we started with, all right, okay, if you can check back, right, we started with a 27.50 strike. Yeah, okay, and we've been moving up, yeah, okay, all the way up to 30 strike right now. So actually, all right, in this process of moving it, I've saved myself $2.50 in losses. Can you see what's happening? And why? Why would I do that? Okay, why would I not let go of the stock? Number one, because I don't expect this stock to shoot through the roof immediately. All right, okay, it's not cleaned up its act yet. All right, it's going to be a slow moving phase. All right, and now, all right, I believe I can get myself out of this call option. Yeah, okay, I'm stuck. All right, but I want to get myself out. All right, so I'm moving it to a 30 call. Right, and I believe in 2 weeks from now, if we get a sell off in the tech sector, all right, I'll be scot free. Yeah, so I get to keep my shares, right, and can restart again. Yeah, okay, yeah. Okay, now so that one is done. All right, let's go to our next position over here, APA. All right, Apache. All right, so we have Apache over here as our next stock. All right, and Apache is now at $33. All right, so we sold a $35 puts. Yeah, okay, so it's slightly under. All right, so nothing to be done. All right, okay, I'm still holding on to Apache right now. So Apache has already announced its earnings, right? Oil in general is not doing well right now, okay, but we're pretty much back in this situation. Can you see that? All right, it's very, very similar, right? Oil prices are being sold off. Yeah, okay, so oil stocks come down together with it, right? But once we have oil stocks, oil prices bouncing, right, this stock can quickly go back up. Why? Because even Buffett right now is still buying OXY, Occidental, right? We're just trading an oil stock that's, severely undervalued. Look, it threw out 119. All right, the estimate is 98 cents. They're still doing better. All right, okay, so it's just falling because of the raw product cost. Yeah, okay, all right, now, so they're pricing in, fear. So that's okay for me. All right, so I'm staying in this fight. All right, our next trade over here is VFC. Right, we have a 2250 puts. All right, it's fighting in there. All right, okay, so VFC right now is about 21.82. All right, so we are fighting neck and neck. All right, so no issues with this. I'm staying put. All right, now we have 3M. All right, $110 puts. All right, this one. All right, we've been bouncing around for quite a few months right now. All right, and this stock has been playing around with us. All right, okay, it bounced back up to 106. It came back down. All right, okay, so we can easily expect it to bounce back up again. All right, now, so how is earnings? While earnings have fallen from the last quarter, but they have still performed better than estimate. All right, so I would still hold on. I would still hold on to the stock. Yeah, okay, this company trades right now at about 11 or 12 PE. It's not exactly very cheap, but it's not exactly very expensive as well. Yeah, okay, so I'm comfortable holding on to this company. Yeah. Right now, so every time we switch, we still generate about a few $100s in cash flow, so I can always repeat the same thing. All right, come 19 on May again. All right, now our last stock position is AT&T. All right, we sold the $18 puts. All right, for AT&T. Where is it right now? All right, AT&T is at $17. All right, so we're still in for a good fight. Yeah, okay, it's been falling off recently. All right, okay, but cash flow is cash flow. All right, this is one of those boring stocks that is still churning good cash flow over here. All right, and we start to see that positive divergence on the chart as well. All right, okay, so definitely I'm holding on for the fight. All right, now, so this month's portfolio cash flow, all right, is currently at 1,681. All right, that means I still have about close to $320 that I need to load up. All right, so have I got a new stock in place? All right, Terence, this market is crazy. This market is risky. All right, can you still find a severely undervalued stock? The answer is yes. All right, and I'm going to load on it right now. So what stock am I going to load right now today, ladies and gentlemen? I'm going to load one. Oh, it's gone. It's gone. See why I hate these kind of big updates? Man. My stock ran away. All right. Oh, well. All right. All right. So you're saying that your concern is the market remains bearish. You end up holding on a lot of stocks with paper losses and not much cash. That leaves to be seen. And I can show you. All right. Have I not gone through this over the last decade? I have. All right. It's been going around and round and round and round. All right. Okay. My job is to do what I can. Okay. My job is to do what I can. All right. So I can't control the market. Yeah. Okay. But remember this. Right. Even in a bearish market, right, when some of these fund managers realize, right, that they should be moving their cash flow from risky growth stocks, right, to strong, fundamentally undervalued stocks, doesn't that mean that a lot of my stocks in my portfolio is going to get the love of all these cash? So wouldn't that actually allow me to get out instead? So think of it this way. Yeah, okay, you're thinking in general, but you're not thinking from a fund manager standpoint, how do they rotate their capital? Yeah, okay, so this is what I've experienced over the last 10 years. I'm showing you what works for me, all right, okay, and I believe that it's going to continue to work. All right, of course, you can have your doubts because, you know, you may not have experienced it, may not have seen it, yeah, okay, but, you know, I've pretty much seen it, done it. Yeah, all right, so you can kind of see why I'm always doing this without that fear kind of in place, all right, because, you know, I've been here, done that, all right, okay, this is not something that's new to me, yeah, okay, all right, now, so that's what I'll tell you. Yeah, okay, the rest has to, you know, be seen with time. That's why I'm still going ahead with year 2. Right, I'm gonna do continue this as long as I can. Right, as long, you know, as all of you continue to appreciate the sharing and the messages I'm putting out week after week. Yeah. All right, now so CVS, what should I do? Oh man, if I get in today, I'll be chasing it. But if I don't get in today, I can't get in as well. So, man. Let's take a look. Okay, we're going for a switch. We're going for an alternative. So what's the alternative? Right? Do all of you recognize? All right, we traded a bank last month. All right, okay, we got out of it with a profit. All right, okay, but recently, all right, the banks have fallen again. So that's going to allow us to get in, all right, on the banking stock once again. All right, so I'm going back to my fifth third. Okay, why? Because the stock was pushed back to a rock bottom because of the new banking fear. I think it's PacWest right now, another bank, right? Yeah, okay, but all these traditional banks are not at risk at all, right? But sell out, think later, right? And today we have the bounce, right? So this set up a great positive divergence. Yeah, okay, so I'm going to take advantage of it. Let's see how much it pays us. I'm going to trade 2 months. Yeah, okay, I'm not going to trade 1 month. Yeah, okay, so let's take 24. I think we can take a 23. All right, so let me go after 130. All right, so I'm going to do a fifth third over here, FITB. All right, how much can I go for? All right, I'll take 130. All right, okay, now, so I'm just going to get the trade off. So I got filled over here for fifth third. All right, June, $23 put option, portfolio puts for 4 options at $1.30. Okay, $1.30. All right, so let's put it on a cash flow. Let's see how it helps us out. This trade 82. All right, 4 options of fifth third. Right, for 16th of June, is that correct? Yes. 23. Right, 5th of May. Right, 130. So in total, it brings us $520 in cash flow, but I'm going to halve it. All right, so it's recognized for 260 this month. All right, I'm good. I'm good. All right, so I'm not going to go after my CVS trade today. We may revisit it next Friday. All right, so if it does come back and taper down again, all right, along with the market by next week, all right, we'll be back. All right, we use it to, you know, surpass us, all right, the $2,000 mark, right? But for now, I'm not going to gun after the risk. I'm not happy to chase, right? As far as I can, I don't want to chase it much higher. All right, so 260 for fifth third this month, 260 for next month. All right. This will be next month's cash flow. Right. So for this month right now, it's sitting at 1,926. All right, I'm still almost there, but not there yet. Yeah. Tanya, All right, so for Apache, right, why is it okay for me to hold the options over earnings? Because I'm not making money. You see where I'm going? All right, I like the fundamentals of the stock. I entered the stock before the earnings, and right up to now, all right, I'm still not making money. So what can I do? I hold it. Yeah. Okay, because this portfolio, you must remember, all right, Tanya, this portfolio is built with a long-term objective. Right? I have the capital ready to pick up any of these shares if needed. Okay, remember, I have the capital to pick up the shares and hold on to the shares if needed. Right? So this portfolio that I do over here is managed very differently, all right, okay, from how we do it within our community. Yeah, okay, all right. So it's done in a very different manner. Right? This is slightly a more longer term approach. Right? So where do I stand right now? Right? For all my current open trades, right? Okay, I am requiring a total of about $148,540, right? The total requirement, right? Okay, and my capital, right? My account capital is worth $127,000 right now. Yeah, okay, so all in, right? I'm over leveraging my account by only 17%, right? 17%. I'm okay with that. All right, remember I said my threshold is around 30 to 40%. Yeah, okay, I'm only using 17% more than what my account capital has. So I'm okay with that. All right, okay, so that's fine. All right, I still have enough cash flow. All right, why? Okay, some of you may be blurred, right? Some of you will say, why? All right, simple. Because my portfolio of $127,000, if I hold everything in shares, right, the broker is willing to lend me a 50% margin. That means in terms of stocks, I can afford to buy and hold up to $250,000, right, worth of stocks. All right, okay, I'm nowhere near there right now. Can you see? I'm only at $140,000. I've still got another $100,000 buffer before I reach the extreme end. Yeah, okay, so that's enough. That's a cushion. That's fine enough. All right, now, so with that, that seems like it's all the action I'm going to take. All right, we'll revisit CVS next week. All right, so if it comes back off, all right, okay, I'll be more than happy to re-enter. Yeah, okay, but for now, this is what I have. All right, and before I go, all right, let me share with you, all right, what is it that we have done, okay? All right, now, so as I said over here, all right, what I've done is I funded a brand new account, all right, on May 1st over here, all right, as you can see over here is TT's account, all right, okay, ending with 687, all right, funded with an exact amount of $100,000, okay, $100,000. Right now, so what this portfolio has done so far, all right, has been selling options, all right, pretty much based on what I've taught you and what I've done, right? But this portfolio is done in a more balanced approach, right? That means, all right, I will sell put options on undervalued stocks, okay, but at the same time, all right, I will also sell call options on stocks that are severely overvalued. All right, so all in over here, this $100,000 portfolio is 60% exposed. Yeah, okay, all right. So 60% of the capital is invested right now. Okay, but the difference is this, right? This portfolio right now is already collecting, right, close to $13,000 in cash flow, right? Just the month of May itself. Yeah, okay, just the month of May itself. All right, now, so we are sitting on 13% right now on this cash, this community portfolio. Right, so I'm going to call this the infinite cash flow options portfolio. All right, it started with $100,000 cash flow live right now. Okay, and we've collected a total of about $13,000 in cash flow from the options that we've been selling. Right, so the only thing different, yeah, okay, is that right we are now using okay my community's option strategy to trade the same approach, right, as what I would do, right, with what I've done in terms of public, right, with all of you. Right, so it's no longer a portfolio puts, right, but we tweak it, right, but the approach and the outline is pretty much the same. Yeah, okay, so we'll track this portfolio together. Okay, we'll track it together over here, right? And for those of you who are familiar with options trading, yeah, okay, I'll just switch this account. Okay, for those of you who are familiar with options trading, yeah, okay, this is what you will see over here, right? The cash value of the entire account is at $12,857. Right, so that will be net of the commission cost, right? So I'm still about 12.85%. That's okay. All right, okay, now, but the net liquidation value is assuming that I close all my option trades today, right? And just with any option trade, right? Just with trading alone, if you open the trade as a seller, all right, I will only close it when I have a profit, right? But as the trade continues day to day, right, there will always be losses, right, which are on paper, right? Okay, that's always affecting the account. So that's not what I focus on. I always focus on the net cash value right, of the account. All right, and now it's showing you 112,000. We'll continue to track this portfolio month by month. Right, we won't do it week by week. Okay, we'll do it month by month. So on the first Friday of every month, all right, okay, we'll bring it on display and then see how we do. Yeah. Okay. So this month I just loaded the portfolio. In fact, I just started it on 2nd of May, right? So we are what, 3 days in, right? But the portfolio has already collected $13,000 in cash. Yeah. Okay. So I'm happy with that. So what am I aiming for this portfolio? All right. Okay. Definitely way above 20%. How much more? I don't know. All right. But from the last year itself, right, the same portfolio that I started from August, yeah, okay, to about May right now, that's about 10 months, right? We have hit 50%. Yeah, okay, using the same exact strategies. Yeah, okay, so I've decided that I just want to be able to put it out live over here. All right, so I funded a brand new account for $100,000 flat. All right, let's track this for the year 2. All right, so we have a public portfolio and we have a community portfolio. All right, so we track it all together. Yep. All right, so that's my second project, all right, that I've added on to our weekly session for year number 2. Yeah, okay, year number 2. All right, so we see how both of them stand in and both of them perform. Yeah. Gavin, no. All right, okay, so if you have already been assigned a stock, just hold on to it for now. All right, okay, just hold on to it for now. All right, Tanya. All right, yes, we'll do our Facebook live session as often as I can, all right, on Fridays. So, unfortunately, sometimes if I do fall ill, all right, then, I won't be able to run the sessions, all right? Or if there's a clash in my mentoring schedules, all right? Apart from that, all right, I will stay committed, all right, to running these sessions live on a Friday basis, all right, week to week. All right, so thank you very much for joining me once again. All right, I will catch all of you next Friday. Next Friday, I have a mentoring schedule clash, so I'll be back with you for options expiry. All right, okay, so I'll be back with you for options expiry, ladies and gentlemen. Yeah. All right, now, so thank you very much once again for joining me. All right, Tanya, you are referring to our community. All right, so my community is where all the traders and our members over here gets to attend a live trading session with me every single week. All right, so that goes without fail. They get a live trading session with me every single week. Yeah, all right, so yes, in short, the answer is yes. So thank you very much for joining me. Have a good weekend ahead of all of you. All right, and I'll see all of you in the next live session, okay? Thank you very much. Bye-bye and good night for now. See all of you soon.